Hey guys, good to see you. Nice to meet you guys via video chat. Good to see you live and well.
Thank you for having us. We appreciate that.
Thank you.
Yeah, thanks for joining our session today. So you guys are there in Texas, correct?
Yeah.
That's correct.
All right. How long have you guys lived there in that house?
About 5 years now.
About 5 years. So you like the neighborhood, like the area?
Yeah, it's a good neighborhood.
Good neighborhood, country living.
Good. And I see Sarah smiling. How long have you guys been married?
About 20 years now.
About 20 years.
About 20 years. I'm going on, it's 24 years. Goes by pretty quick.
It
It
does.
does.
It looks like Sarah can still put up with you, though.
Yes, you can.
All right. Well, guys, I want to take up a lot of your time. Thanks for joining me today for mortgage protection, as you can see here. This is the form that you filled out and sent it back in. Whose handwriting does that look like?
Looks like Sarah's.
Looks like Sarah.
It's
Sarah,
mine.
when you sent that in, what were some of your thoughts? What did you want the protection to do for you guys? When you're reading it, what was your instinct on sending it in?
It was that I didn't want to lose our home. I didn't want to have to move our families if something would happen to Joe. He's the one that works right now, so he's the one that provides. I just want to make sure that we're going to be taken care of.
Okay. All right. Well, absolutely. And that's what I'm here. I'm going to review a couple of things with you guys here. So first, to start off with like some of the mortgage protection here, some of our options. What's my role and purpose? Why am I here helping people? So basically, Joe, I'm licensed with the state. I'm a broker, represent about 40 different insurance carriers. Each one is tailored to different people in their unique situations. Some are better suited to people that have medical issues, diabetes, high blood pressure, why some are others suited with people with perfect health. One of my expertise here is to navigate through the insurance options and narrow it down to the absolute best one for you based off your health and your budget. So my purpose would be to help you apply for the coverage and work with the underwriters to get it approved so we can protect your family. Does that sound okay?
Yes, it does.
Now, Joe, can I ask you a favor?
Yes, you can.
Would it be okay if I shared with you why I'm actually helping people, why I'm actually doing this? Would that be all right?
Yes, it would be. Thank you for doing that.
Yeah. So, Joe, for me, mortgage and protection is important. When I was young, when I was 3, my dad passed away in the military. And we ended up moving in with my grandparents, my mom and 3 kids, single mom. And the military paid for his funeral. And I think it was about $10,000 or $15,000 that they gave my mom. And that was about it. Later on in life, my grandparents passed away when I was 12, but it wasn't until I think I was in my late 20s that I found out that they put mortgage protection on the home. So I grew up in that house. When they passed away, it paid it off. My mom still lives in that home today. So for me, mortgage protection is a way to pay it forward, to help others, to make sure that they have the very best protection, just like it was given to me. So I don't sell anything at all. I'm here to help you put a good plan of action in place in the event of a tragedy, not if, but when, correct?
That is correct.
So some of the things that we do here, Joe and Sarah, we help protect life's journey, whether it be accidental death, mortgage protection, final expense, any health as far as disability, dental, or even helping families get out of debt within 7 to 9 years, including paying off their mortgage. All right. Okay, so the next one. So remember when we were talking on the phone and, I asked you a whole bunch of medical questions. So I kind of just wanted to review those again. So tell me a little bit about your health. We realized that you don't smoke. I knew what your height and weight is. Any medical problems, high blood pressure, stroke, cancer, asthma, arthritis, COPD, diabetes, anything that I should know?
I'm diabetic.
You're diabetic, Sarah? Are you type 1 or type 2?
Type 2.
And are you doing metformin, insulin, both?
Metformin, pills, no insulin.
Okay. And then when were you diagnosed?
About 3 years ago.
About 3 years ago. Okay. All right. Anything else? Any other medications that you're taking?
No.
Any surgeries or accidents in the last 5 years?
No.
Okay. And any DUIs, license suspensions, or revoked or anything like that?
No, nothing.
Just
No.
speeding tickets.
Just tickets? Okay. All right. Okay. So basically what I want to do is, and thanks for answering those. I want to really determine whether or not you need mortgage protection. So I never want to recommend more protection than you might need. So I'm going to ask you some basic financial questions to help determine how much coverage we should be looking at. You know what, Joe and Sarah, from there, you'll know what it will actually look like financially if either one of you weren't working, or what it would look like, heaven forbid, if one of you were to die tomorrow. And so it'll help determine whether we need mortgage protection or not. If we do, I'll help you pick out the right plan for you and your family, fill out the application, and send it into underwriting. If we find there are other assets that we can use as a form of mortgage protection, well, Joe and Sarah, I'll help you guys determine how to use those as a form of mortgage protection, and then my job's already done. Does that make sense? Does that sound fair?
Yeah.
Sound okay?
That sounds fair.
Mhm.
Okay. So one of the first questions here, I want to understand some of your concerns. So Sarah, you expressed the main concern of protection and putting in the home would be paying the mortgage off, if something happened. What would it look like if you or Joe weren't working? How would that impact your family from a financial standpoint?
We wouldn't be able to pay our bills.
Wouldn't be able to pay the bills.
Mm.
Okay. And how do you feel about that, Joe?
I don't feel good at all.
Right. And then if you or Sarah were to pass away, what would that situation look like from a financial standpoint right now?
Or we have a 15-year-old boy, and he would be in a house by himself with no money.
Yeah. And Sarah, how do you feel about that?
I know that in the event that Joe would pass away, we would have to we'd have to sell the house. I'd have to move my son from where we live to where one of my relatives lives, so I'd have to take him out of his school, and I definitely don't want to do that.
Okay. All right. And then if something would happen, heaven forbid, to either one of you, would you want to stay in the home, or, would you be able to afford the home, or would you move or rent or buy another house?
I would want to stay.
Yeah, I want to
You
stay.
want to stay. Okay.
Yeah.
All right. So that helps me to know what's the best direction so far to go with you guys. Okay.
Okay.
All right. So one of the biggest questions that I always ask families is getting prepared for the future. Have you guys thought about or set anything aside for any funeral expenses so far?
No, we have not.
You haven't. Okay. So that's one of the things we'd look at. Do you guys want to be buried or cremated?
Buried. We're Catholics.
Catholic. So that's about an average of $15,000, right around there for the both of us. So as you look, it automatically populates. Now we know for a funeral, it's going to be about $15,000. So we want to prepare for that for the future then. Okay. All right. So the next one here is, are you tracking your monthly expenses? So this is kind of paint a picture of what it's going to look like for us. So I've already put in here, you see your mortgage balance, $200,000. We talked about what your payments are there, $1,700 a month.
Mm-hmm.
Joe, do you have any credit card debt right now? Do you have any credit cards that you're paying on?
Yeah. Me personally, or both of us?
Just you for right now.
I have about $4,000 in credit card balance.
Okay. And then how much do you pay a month on that?
About $190, $200.
About $200?
Yeah.
Okay. And then Sarah, any credit card balances?
Yeah, I have like 8,000.
What's that?
8,000.
About 8,000. Okay. And then how much do you pay a month on that?
It's about $350.
About $350.
About $350. Okay. And then I'm sorry, I I forgot to ask, are you guys both paying on the mortgage together, or does just Joe pay on it?
I pay that, but we
Pay
both
that.
work.
Okay. And then I'm sorry, Sarah, how much do you pay a month on your credit cards?
$350.
$350. Okay. And any car payments?
We have one car.
Yeah. I pay the car. It's about 23,000 we owe,
Okay.
and we pay about 500 a month.
About 500 a month. Okay. And Sarah, you don't have a car payment at all then?
No.
Okay. And any personal loans, things like maybe it could be a Wells Fargo loan or Home Depot or even a furniture store?
No.
No.
No. Okay. And any student loans, things that you'd be helping with kids, yourself, grandkids?
Yeah, we went to college. I got degrees, so we do have student loans.
Okay. Are you paying on them right now, or are they deferred, or what's happening there?
We're paying on them now.
Okay. How much do you owe and how much do you pay?
I owe 35,000,
Okay.
and it's about 350 a month.
Okay. And then Sarah,
She owes
any
about,
student loans? No?
yeah, she has them.
Okay.
45.
Hers are 45,000.
45. And then how much do you pay on that, Sarah?
About 400.
About 400.
Mm-hmm.
Well, yours is 35,000, not 30. Okay, so let's change that. Okay. And you pay about 400?
Mm-hmm. Yes.
Okay. All right. Okay. And what would you guys say your monthly expenses are? Things like power, water, gas, and then cell phones, cable TV, internet, food, car insurance, anything above your other expenditures, just to keep the household going.
About $1,000 a month.
Do you guys both pay that together, or do one of you pay it separate?
Yeah, together.
Together. So how much of that do you pay, Joe?
We pay about I pay about 600.
Okay. And then Sarah, you pay about 400?
Mm-hmm.
Yeah.
Yes.
Okay. Whoops. All right. So here's what I'm looking at, guys, as I put in all the numbers for you. You know, Joe, your outgoing every single month is about $3,350. And then Sarah, yours is about $1,150. So combined, it's about $450, correct?
Mm-hmm.
Right.
So if either one of you passed away, you would assume each other's bills. So each of you would have about $4,500 to maintain on your own if something happened to either one of you. And looking at that, how do you guys feel about that?
That's a high number.
It's a high number. I never thought about that. It's a high
Pretty
number.
high, huh? A little bit. Okay. So let's take a look at some of your retirement here. See what we have in place. Joe, how much do you make a month after taxes? What you have to use for the family?
About 4,500.
About 4,500. Okay. And then Sarah?
She makes about 1,800 a month.
About 18.
About 1,800. Okay, so right away, if I come back up here, you remember that screen where it shows that we have $4,500 a month, right?
Mm-hmm.
Mm-hmm.
So Joe, if something happened to Sarah, $4,500 a month, it looks like you would be okay. You might have to cut back on some things, but financially, it looks like you would be all right. If something happened to you, as we look at the numbers here, you know, it looks like it would be pretty devastating for Sarah, correct?
I'd be in a lot of trouble. Yeah.
Correct.
Okay.
True.
All right. So, Joe, do you have any? Oh, you're still young. You haven't retired or anything like that, right?
No, sir.
Okay. All right. So retirement, do we have anything in place? 401k, stocks, annuities, bonds?
I have about 50,000 in 401ks.
About 50? Okay.
Sarah has about 15,000.
About 15. Okay. Anything else? Any real estate, any savings, any coin collections, anything that you could liquidate, tools, collectible items. What I'm looking for, guys, is heaven forbid if one of you guys died tomorrow, what would the other one have that they could use for, to balance the rest of their income out? They could use if they needed to sell anything, if they need to liquidate. Anything like could be trailers, campers, motorhomes, recreational stuff, collectibles.
We do collect old toys. So I have about a few $1,000s of collectible toys.
So about $2,000 in collectible toys?
Yeah.
Okay.
All
right.
That's pretty much it right there.
That's pretty much it? Okay. All right. And do we have any form of mortgage protection or life insurance in place right now, or through work or anything?
Through work, I think Sarah has about 50,000 from work.
Okay.
And then she also has short-term and long-term disability.
Okay.
And then I have no work insurance, so no short-term or long-term.
No. Okay. All right. So going through work is really important because you can get a low cost and a high face value, right?
Mm-hmm.
But that's probably the benefits of it. There's some other benefits to it, but I would say one of the drawbacks here. Have you guys ever rented a house before, rented anything?
Yeah, when we first married, we rented all.
Yeah. So you remember if you wanted to hang a picture up, put a hole in the wall, or make any changes, who did you have to ask permission from?
The landowner.
Landlord. They made all those choices, right? If you own a house like you do now and you want to change something, who makes the decision?
Sarah does.
Sarah does, right? Good answer. Man after my own heart. That's awesome. I'd say the same thing. Otherwise, I'd be in the doghouse.
Exactly right.
Right. So basically, with your policy going through work, they own the policy, right? Mm-hmm. So they're the ones that sit down every year and make any of the changes and decide what kind of protection they're going to provide for all the employees. Now, one of the biggest drawbacks is if you ever leave that job, what happens to your coverage?
It's done.
It's done. Yeah. And then if you retire, what happens to it?
You lose it as well.
Lose it as well. Or they might let you keep it, but are they going to continue to pay on it if you're not working there anymore?
Absolutely
no, not. Right? So looking at it, going through work, would you consider that stable?
No.
No, it changes all the time. And, it's not stable. So what we want to do, Joe, is put something in place that's stable, something that you can call your own, that you control, you make all the choices and decision on. Does that sound okay?
Yes, it
Somewhere
does.
where you can have something in place that you're in control of your family's future, not somebody else.
I like it.
Mm-hmm.
All right. So as I'm reviewing everything, Joe, is there a need for mortgage protection? Remember in the beginning, I told you I wanted to really look at this and break it down and see if there was an actual need for the mortgage protection. So as we look on your side, on your mortgage balance side, Joe, we need about $148,000 in protection. And based off your total insurance, your assets, and your total insurance and coverages, as you can see the diagram here. And then for Sarah, on your side, everything's, if you can see it here, you see your mortgage balance, your total assets, your total insurance, everything that you have going on. So that gives us, we need probably about $180,000 in coverage. Now that's just to pay off the mortgage, correct? Mm-hmm. After a mortgage is paid off, that's just eliminating a monthly payment. We still have annual taxes. We still have cable, we still have all those other monthly expenditures taken into account. So we can just cover the 148, or we can cover the full 200,000, which would give us more living expenses after somebody passed away. Does that make sense?
Mm-hmm.
Yeah, it does.
Okay. All right. So knowing what our options are. So I'm just going to go over a couple of things here, explain a little bit between the difference of mortgage protection and life insurance. So a full mortgage payoff, can be harder to qualify for as we age or develop health issues as we get older, right? So you guys are still young enough that we still be able to qualify and don't have a lot of health issues or anything like that. Partial mortgage payoff, the way we look at that would be, covering for natural death or partial coverages for accidental or more affordable options. So example would be if we had your $200,000 mortgage and then we were looking at doing $100,000 policy, well, that's going to give us another 100,000 that we could look at accidental death to cover the full amount of the mortgage. Okay, does that make sense?
Mm-hmm.
It does.
All right, and then we'll take a look a little bit about this. There's also programs that we call the equity protection, which is our critical period. So your equity, this is just an example. If it was 50,000, which means you owe 200,000 in your mortgage, 250K, let's say that's what it appraised for. So that gives you instant $50,000 in value. Equity, goes up over the years. So let's say in 15 years, it got to be the value of 350,000, and you only owe 130,000 on your mortgage because you've paid it down. Now your equity is at 250,000. So we want to look at protecting that, whether paying it off or even moving into making the monthly payments. Paying out a lump sum so you can put in the bank and pay on the house payments for 6 months, 12 months, 18 months, or 24 months.
Mm-hmm.
So those are some of the options that are available to us as well. Living benefits, death options. Well, it's a level benefit, not a decreasing. Means like, let's say your mortgage is $200,000, and we put a mortgage protection policy in place that's for 20 years or 30 years,
Mm-hmm.
and you pay down the mortgage down to 100,000 or 150,000. Does the benefit still pay out 200,000? Yes, that's what a level benefit is. If it was a decreasing, it would only pay out what you owe on the mortgage over the years. Living benefits like critical illness, heart attack, cancer, stroke, etc. And then one of my favorites is return of premium, getting getting your payments back, whether it's going to be a return of premium term policy or a whole life policy. So it's more like a safe policy. If I don't use the policy in 30 years or 20 years or how long the term is, then I'll get a portion of all my premiums back.
Mm-hmm.
So we kind of went over that. As I look here, this is Joe's is up here on the top. His death benefit, we need 148,000. Sarah's is a death benefit of 180,000. Of course, we can still look at the 200,000 on paying off the mortgage.
Okay.
Accidental death coverage, we can look at that as far as covering 100,000, 200,000, or where we need to be. Return of premium, returning the premium, getting a money back option. Living benefits, heart attack, stroke, cancer, dismemberments, which is your critical illness, or making the monthly payments on the mortgage.
Mm-hmm.
So Joe and Sarah, if you guys had to rate these, it looks like I know they're all really important, but if you really had to rate them, what was the most important for your family, which one of those would be number one?
Death benefit.
Death benefit. Yeah.
Death benefit. And then which one would be the second after that?
The living benefits, critical illness.
The critical illness, the one down here.
Yeah.
Okay. And then after that?
The 12 months of the living benefits for 12 months of payments.
Of the
Okay.
month. Yeah.
Yeah.
And then it sounds like the other two kind of fall in suit. They're not too important.
Yeah, not
Mhm.
really.
Okay. All right. So now that I know what's the most important to your family, that gives me a good direction here as well. Now let's look at some of your potential equity. Joe or Sarah, what would you say your most important asset is?
Our house?
Our house. Yeah.
Absolutely. Everybody says that, right? But Joe, if you weren't working or if you died, how could you pay for your house?
I don't know.
Right? So who's your number one asset?
We are.
You are. You're your first and your spouse is your second, right? Then your house, well, obviously then your kids, but then your house is your third most important asset. So if you were to sell the house, or if it was to go through an appraisal, what would it come back out? Do you know what the home value would be?
It's at $250,000 now.
$250,000.
Yes, sir.
So it's at 250,000.
Correct.
Okay. So instantly, as I just put that number in, here's your loan amount, the 200,000. It gives us $50,000 in instant equity. Now, houses, national home average increase 3 to 5% every single year, whether the market's going up or down. So a possible equity increase over the next 10 years, is about 20% for us. So this gives us about another $50,000 to look at. And then as you're paying the mortgage balance down, a national average is about 5% over a 10-year period. So that gives us another $12,500. Could be more just depending on your interest rate. And then your possible future family home equity is $112,500. So whose equity, whose money is that?
That's our money.
That's your money, absolutely. So in the future, Joe, if something were to happen to either one of you, well, now we have options, because the house is worth more than what we owe on it. We can refinance and get a lower monthly payment that Sarah could possibly afford on her own, or vice versa. Or we can take out a home equity loan, put that money into the bank, and pay the payments back off of their own money. Mm-hmm. And then lastly, if we needed to, we can sell the home, and then that $112,000 becomes a death benefit, to where either one of you could use it as a big down payment or even buy something outright for yourself. How does that sound?
That sounds good.
That's pretty cool. I never had that broken down like that.
Yeah. So what we're looking at doing in the event of a death, mortgage protection can protect your equity and pay off your mortgage balance, as we see here, $200,000. Or on the event of a death, it can take over and pay out a lump sum you put in the bank and make the monthly payments back on your $1,700 a month payment. So let's talk about selecting a plan. What's the best options for you and Sarah? Mm-hmm. Selecting a plan, as we go over the options, it's important we find something that gets you the protection you need, fits within the budget. So Joe, how long have you guys actually been looking at mortgage protection?
At least about a year now.
About a year or so, a while. So you've been kind of talking about it, thinking about it for a while.
Yes, sir.
Joe, when I work with families, I always want to put the very best protection in place. The best protection was done for me when I was young, so I want to pay that forward, right? Mm-hmm. I think all families want to have the best things taken care of for their families. Wouldn't you agree?
I agree.
So as I'm going over the plans, if it feels comfortable and it feels affordable for you guys, let me know, and we'll go with that plan. If by chance it doesn't, right? Mm-hmm. Then also let me know as well. What I found is usually if I hear somebody that says we got to think about it or pray about it, it's always generally because of cost. And remember, guys, in the beginning, I told you that I'm here for you, correct?
Correct.
Yeah.
So I want to make everything as comfortable and as affordable to make sure that your family is protected the right way. Does that sound fair? Is that okay?
That sounds good.
Okay. So let's take a look at selecting the right plan here. So on the left here, you can already see that it's populating what your mortgage balance is $200,000. So that's the full payoff on your mortgage. So that would be right here. The half payoff on your mortgage would be $100,000, and then the partial payoff on your mortgage would be $50,000. So now I also want to explain that we're looking at this as an individual. So this would be just for you, Joe, and then I'll calculate some numbers for Sarah as well. Hers would probably be a little bit less because women are a lot less risk. Us guys, we get crazy, right?
Yes, sir.
So it's based off an individual policy. Now, I can't put two people on one policy. What that does, though, is sometimes the primary person can get full coverage where the secondary person can get only 50% of the coverage, or sometimes we can get full coverage, but then it's going to cost a little bit more. And then if something happens to an individual, the policy would pay out and might cancel, and then we have to requalify all over again if we want more protection for our family. So I always recommend that it's the very best to have your own separate individual policy. That way we can get full coverage on both of you guys, as well as once you're approved in the future, if one of you guys were passed away, then the other person doesn't have to requalify. They have their own individual policy. Does that make sense?
Yes.
It does.
And the cost difference is usually just a few dollars. It's usually only maybe like a $10 or a $15 difference a month on a payment. Okay?
Okay.
All right. So looking at the death benefit, Joe, doing the full mortgage payoff for yours would be $69.75 a month. The short-term disability, that's where we would be make the payments if you weren't working from injury, illness, or accident. That's $81.25 a month. And then if we added the critical insurance, which you really liked, the heart attack, stroke, cancer, things like that, that would be $95.56 a month. And then the return of the premium, getting some of your premiums back if you don't use the policy in the future. That one's $118.52. And then as you can see, some of the other ones here, the half mortgage, the cost on each one of those as it breaks down. We would make up the difference if we did $100,000 in coverage. We could do the accidental death for another $100,000, which would get us $200,000, but that would be $19 additional on each one. Okay. And then the bottom one here, as you can see what it would play out as well. So looking at this, Joe, what do you think would be the very best option to make sure that your family was protected? Joe and Sarah, obviously.
I would think the first option.
Yeah, I like the first one.
The first one here. Okay.
Well, I like the option 1 for the full mortgage, but with the return of premium.
Okay. Yeah. Most of the families I work with usually pick something right here in the middle. Because it is, we don't know if we're going to be in the home 15 years or plus, but you guys are still young enough, and it looks like it's affordable enough to do the full coverage. Does that sound okay?
Yeah, and that's like a savings, pretty much, like.
Yes. Yep.
Okay.
Absolutely.
What? Like a plan.
Yeah. So basically, these are some of the carriers that we go through. Like I said before, there's about 40 of them plus that we go through. This kind of just gives you an outline. I'm not particular to any single one of them. One of the ones that came back that was going to give us the approvals for the coverage we're looking at today, and the policy values and the cost was American Amicable. So what I'm going to do is I'm going to pull up their application here and just start going over and asking you guys some questions.
Okay, sounds great. Thank you.
All right. Okay.
I feel great. I feel relief.
I feel like a big weight off my back now. So thank you very much.
Awesome. Sleep a little bit better at night?
Yeah, definitely.
Definitely.
Now, remember, we sent the application in. It's still going through underwriting. But one of the best things that I love is once it gets approved, it's going to backdate it to today, that when we sign the application. So if anything happens in between now and then and you get approved, you'll be covered.
Awesome. Thank you.
Great.
Thank you very much, Mr. Farron.
Oh, no problem. It's a pleasure helping you guys. So, so if there's any future phone calls from underwriting, they might want to call and do a phone interview. It'll just basically be all the questions that I asked you, all the health questions. And then if they need any kind of any further options that they need to have filled out or any signatures or anything like that, I'll give you a call and let you know. And then as soon as it gets approved, I'll also either shoot you an email, give you a call, let you know what's going on there as well, and to be watching out for that first initial draft coming out of your account then, okay?
Okay.
All right. And, if you get any other phone calls about mortgage protection, two things. You can just tell them that you're already covered, well, that you're already working with somebody, and then you can give them my phone number so that they don't waste any of your time then, okay?
Okay, gotcha.
And then if you get any flyers in the mail, you can just toss them. If you fill them out, they're just going to come back across my desk again.
Okay.
All right.
All right.
Thank you.
Thank you.
I appreciate your time.
No problem. Just a couple more things here. Joe, who do you know that that you think that would honestly need the mortgage protection just like you guys did today? Any family members or friends?
My sister for sure.
Yeah, I have my brother and then my niece and nephew.
Okay. So we can do two things. I can spend some time right now with you and write them all out, or I can email you guys a form. You can fill it out for me, and then I'll give them a call, or you can prep them and tell them I'm going to give them a call. And every person that does get a policy through us, then we'll set them up and give them a gift card we'll give you guys a gift card for doing that.
Oh, cool.
That is cool. Yes.
That's awesome.
Is that as many people as we want to send you? We got to
As
get
many as people as you wanted to see. So if you wanted your policy paid for every month, that's like 3 or 4 referrals. To send them my way, and we'll get you guys taken care of.
Well, send me a sheet, and I'll send you a list.
Okay, awesome. And then the last thing, Joe, who do you know that could use an extra $1,000 or $1,500 a month?
My brother.
Yeah, I have a couple of friends that just lost their jobs because of the coronavirus. So definitely.
Because of what's going on, huh?
Yeah.
All right. So my firm are actually hiring right now. So I'm going to send you my business card, and on, next to it on the side, it's going to have a website, Symmetry, the Symmetry Financial Life website, and you can log on there and find all about us. I have a couple of videos about what we do. I also have a link so they can set up an interview that I can give them a call and see about bringing them on board.
All right. I appreciate that very much. That's really awesome of you doing that.
All right. Okay, guys. Any other questions? Anything else I can go over for you?
I'm good.
That's pretty much it. So we have your number on our phone now, like you said. So if I have any questions next year, 2 years, 10 years, just call you.
Yes, absolutely. Fantastic. I love that. Yeah. So I want to be your personal advocate, help you guys every step of the way. So if you do need me, whether it's going to be with it tomorrow or 10 years down the road, give me a call. And Joe, if I don't answer the phone, please leave me a message. I always get back to everybody within 24 hours.
Okay. I sure
Right?
will.
And if you don't hear from me within like a week, that doesn't mean that I'm ignoring you or anything like that. It just means that I haven't heard anything from the underwriting, on any kind of approvals or anything like that. As soon as I know, I'll make sure that you guys know then. Okay.
Thank you for that, sir. Thank you for the clarity.
All right. Well, you guys are awesome. I'm so happy that we were able to help you and pick out the right plan and get you guys protected.
We
So,
appreciate it.
yep. If you need anything, don't hesitate to give me a call.
Okay.
All right. Thank you, sir.
Anytime. You guys have a great day.
Bye.
Bye.